Morning, everyone, and welcome to the Monday morning market review on this beautiful morning, 22nd of March. I know that for many of you, it is a public holiday, or as they say for our UK members, a bank holiday. So hopefully you're going to enjoy it today. But remember, it is also the start of our first 2021 trading challenge today. So I trust that you have updated all of your technical analysis over the weekend and are already rocking and rolling. No time to waste, although we do have 6 weeks to go. I hope you guys are going to really get the most out of this challenge. I know we have some really great prizes on offer for the winners. But I think the number one prize that you can get is what I really want to teach you through the course of this challenge and every trading challenge, in fact, and that is the ability to consistently take the next trade according to your strategy. So remember, consistency comes out of having a developed and robust trader's mindset. It is the number one product of that, if you like. It is also the most difficult thing for people to cultivate. It doesn't fall into the sexy side of trading. In fact, the true value of consistency shows itself when you really are struggling the most with your trading. So it's all well and good to take the next trade, which is of course the heart and soul of consistency, when everything is going well. The trick, however, and really the difference between people who make it in trading and those who don't, is the ability to keep doing the right thing, which of course is consistency, when you don't want to, when everything seems to be conspiring against you and against your strategy or your approach to the market. And of course, this isn't just true for trading, but it is it's a very raw experience with trading. You can't sort of hide from it. And being able to break the ice in terms of being able to do that is a key step, an absolutely key step in becoming successful as a trader. So that really is the number one purpose behind the challenge. Everything else is either a carrot or a stick to help you achieve that. But on top of that, obviously, we will also be doing a lot of training on the other sides, the other elements or attributes that you need to master in your trading journey. So it's not just limited to that, but that is the ultimate goal, is developing consistency. So welcome to the next 6 weeks. I hope you guys are going to enjoy the trading challenge. If you haven't yet registered, then please do register. The only people who are eligible for any of the reviews of their trading accounts and of course prizes in the trading challenge and everything else that we are going to be making available to you guys through the course of this challenge, well, you really need to be registered in order to have access to that. So if you're watching this as a recording as well, please make sure that you look at the post associated with this video, click on the link and sign up for the challenge. Just a couple of other bits and bobs in terms of guidance for the challenge before I dive into our market review. The thing also to remember is that sometimes not doing anything for a while is also a good thing. I'm going to talk about that in the context of where we're at right now, generally in terms of market conditions. But if you find yourself 2 or 3 weeks into the challenge and you feel like you've blown it, then take heart. You can start again. If you've made mistakes, if you've broken the rules, you can start again. And in fact, in my experience of trading challenges in the past, and even going back like 15 years, I can tell you that quite surprisingly often, the people who win it are people who maybe were latecomers to the challenge or people who did reset and gave themselves another chance. So even if you are watching this into the challenge and you feel like you've missed the start, well, that's not true. Okay, so if it's a few days before the end of the challenge, then okay, maybe not. But you do need to take 20 trades in order to qualify for the prizes and what have you at the end of the challenge. So please do make sure that you have your skill set sharpened and your rule set in place, and get going. 6 weeks to go. I hope you enjoy it, and I hope you get a lot of value out of it. All right, so let's jump into our Monday morning market review. I must say, to start off with, that last week was definitely a challenging week. We've had an absolute party for quite some time now. We had at least 3 weeks of exceptionally easy trading conditions especially for trend trading strategies. The folks who kicked off their funded accounts almost 2 months ago, I think a lot of you have made great strides towards qualifying with your evaluation accounts, the funded trader program. The trick, however, is knowing what to do when the party stops, when the music stops. One of the key things in trading is being able to keep money that you've made, and you've seen me talk about that quite a lot, and it can be quite difficult to change your approach and your mindset as well when we transition between really good trading conditions and not so good, or vice versa even. Very often, if you've had a few weeks of fantastically favorable trading, to transition back into a much more cautious approach and to sit on your hands and do nothing can be quite difficult, because you just want to keep on going. You don't want the party to end. So it's absolutely essential that you accept that the party is over. And of course, your skill set, your ability to read charts and so on should help you with that. Not only that, you will, at the end of a party, generally, we will also find that a lot of the trades that we were in that were doing well end up turning around and getting stopped out for smaller winners, or even losing or break even trades. So that in itself can very often be a sign that it's time to step back and just reassess one's technical analysis and so on, to make sure that you're doing the right thing. On the other hand, if you have been going through a really dull period in the markets and there hasn't been much happening, and things start moving, as happened about a month ago, you need to be ready to jump on board all of those trades and really make the most of it. Make hay while the sun shines, because especially with convex trading, as I've shown you, is really the only way to not just make money, but to survive and even thrive long term as a trader. You must have the convex approach to the market. You can't make the market do what you want it to do, but when it does, you need to be all over it. But when it's not doing that, you need to bide your time. You need to be patient. And that, of course, as you know, is one of the key attributes of the mindset of any successful trader, is just being patient. It would be fantastic if we could encourage the market somehow to do what we want it to do, but it just doesn't care. And we need to just make sure that we are rigorous in the application of our rule set. All right, so the overall picture, the overall theme last week was that the really nice trending conditions that we were experiencing beforehand across many of the instruments came to an end at last. We always knew it was going to happen, of course, and it really did. So it doesn't mean we might still get a continuation in some of the instruments. We'll have a look at those as we go through it, but we might not. Remember in our training on technical analysis, when a trend comes to an end, we have the 3 R's. We have range, which we assume up front, but we also understand that it's possible that might be short-lived. We could also, from that, get a resumption of previous trending conditions, or alternatively, we might get a reversal. So we don't assume that we know what's going to happen next, but we do apply our skill set in order to probabilistically understand what is more likely to happen next and take appropriate action. All right, so Euro USD, looking at the weekly, still deep inside of our channel here. There's no WM pattern. The only thing that we did have, which I spoke about before, was that overlay, which worked very nicely on the weekly time frame. Here on daily, nothing doing. Certainly, I'm not going to, I'm going to focus on what happened during the last week, which is the last 5 days. We did have an overlay that didn't work out here, but that's now pretty much over and done with. So we have nothing going on the Euro USD at the moment when it comes to our the strategies that we've been talking about. For those of you who have followed my training in the past, where we talk about harmonic patterns, advanced harmonic patterns, this is a potential bullish Gartley setup. Yes, it is. A few people asked me about that. But that's really outside of the scope of what we're looking to do at the moment. So I'm not going to be spending time talking about harmonic patterns over the coming 6 weeks. However, for those of you who have expressed interest in that, we are going to be building out the advanced trading section in the Trader Development Center, which will be including that. So look out for that in the future. However, in the meantime, just as a quick aside, we have started building out the technical analysis section. Have a look at what I've put in there. At the moment, it's mostly the recordings of trading that we've done in the past. So instead of waiting until it was perfect, I decided to start building it out slowly so that you guys have got access to that training in the meantime, and then there's a repository for it as well. So please do go check that out. If there's stuff missing at the moment, rest assured that we will be filling in the blanks, and I will be drilling down into all the detail that you're looking for. So just a bit of patience required there. All right, so let me move on to a couple of the other pairs. I'm not going to be spending a huge amount of time on pairs that we're really not interested. However, on the weekly time frame here on GBP USD, we are still outside of our channel. There is the possibility of a next impulse wave over here. So not only that, but we did have, we spoke about that, we've still got these inside bars here. So still potentially good for an impulse strategy, which you should have jumped into last week, I think Thursday. So that's obviously not doing fantastically well at the moment. In fact, this morning it's come down pretty close to our stop, but it was valid. So that is something that I would have expected those folks who have got risk budget available to have taken. So let me just close this down. So some of our funded accounts doing really well. As you can see, this one's already just in the space of a few weeks halfway to meeting initial target. Okay, so that's GBP USD. Dollar yen, likewise, we've been trading this very actively now for several weeks. So it's been really, really nice. But last week, we saw things really come to an abrupt end with this slightly bearish doji. So, technically speaking, that did make a higher high last week. So we are still technically in this wave. Already this morning, I see we've had a lower low formed. We don't know what's going to happen through the course of the week. We might will get a resumption. So technically, for daily impulse, this is still valid. We had a previous daily impulse, obviously, that we spoke about before, that ended up getting stopped out for a smaller loser. But otherwise, we did have an overlay that had take profit on this. So that kind of took account of that for us. We were able to recover the loss on the daily impulse. But we also had H4 impulse trades on this one, going back a little bit further. I was trying to get the zoom tool out of the way. But it didn't work out either, as you can see. So overall, last week we had a small net loss on the dollar yen, but definitely the overlay helped a little bit with that. So yeah, just bear in mind that this is going sideways at the moment. So on the daily time frame, clearly, we're back inside of the channel, as you can see. We've actually had a complete end to this bullish trend with phase two. Remember, that is in fact not an impulse wave, it's a phase two wave. I'm hoping that even though we've got a higher high, you guys all understand why that's the case now. So that's the end of this bullish trend on the daily time frame. Technically, that also means, even though we've got a higher high here, for those of you who are moving ahead on your multi-time frame analysis, if the trend on the lower time frame is over, it means the wave on the higher time frame is also over. Okay, so the fact that we've got a higher high here, if you're doing single time frame analysis, would tell you that actually this wave is not yet over because this high has not yet been isolated. But if you are combining that with the multi-time frame analysis, and you understand that a wave on the higher time frame will be a trend, strong or weak, on the lower time frame, when the trend is over, the wave is over. Okay, so that's what this is telling us, which means that we're not looking to do anything on this currency pair at the moment. That's quite an important point to make. Right, dollar Swiss, this has given us that isolated high already last week on the weekly time frame. So definitely that bullish wave is over. Daily time frame, we saw that come to an end here, as you can see, with very significant, much more significantly, more obviously than what we saw on the dollar yen. So over inside the channel, nothing doing here. I think we had an overlay at some point, which I don't know why that analysis is not included over here. Pretty sure this was an overlay last week that hit take profit. In any case, that's not the most important thing here. It's just seeing that this is over and done with. And that's really the theme that we're seeing across quite a lot of the instruments that we were trading previously. So dollar CAD, this is still very much outside of the channel, of course. Happy with that. But again, similar picture, is this bearish wave still intact? Well, according to single time frame analysis, yes, it is, because it still made that lower low. But if we look at this time frame, well, in fact, here it is still intact as well, because we have not yet had a breakdown in the sequentiality of cyclicity on this pair. And for those of you who are new, and there are quite a few of you who are, and you're finding all of this lingo a little bit going over your head, rest assured that we are going to be getting you up to speed with all of this over the coming weeks through the course of the challenge. On Thursday, we are doing our training purely for members of the Academy, and that we started the training for the skill set technical analysis using advanced price action last week. The recording is already uploaded, by the way, so please go and find that. But we are also going to be doing that every single Thursday, and this Thursday, of course, will be the next installment in that. So if you aren't familiar with advanced price action technical analysis, well, obviously that's a very important reason for you to be here inside of the Academy, and we will be covering all of these. Those of you who also took part in the masterclass a couple of weeks ago, day 2, hopefully you've you absorbed that, because that's what I'm talking about here. All of the elements of the skill set that we discussed on that day is really what I'm applying here at a practical level. All right, so I've just got a question here from Pino on dollar yen. Let's go back to that. We're waiting for a break above that resistance level on D1 be too conservative or predictive? No, not at all. Okay, remember, strategy dependent again. So if you're inside of the channel, you'd need to have a breakout before we can look to trade this on with a core strategy, or with a certainly with one of the impulse or continuation strategies. So we cannot trade a trending strategy when the trend is over. So we do need to wait for a breakout. Now, at the moment, if we're just looking at the HTC channel, that's the top. The bottom is all the way down here. So we're not really expecting that to happen, of course. But remember, the HTC channel does the one side of it lags, it sort of trails behind price. But that's why the LPO channel can be very useful, because it gives you a better initial understanding, but not so much in this case because we had this very long extended impulse wave, didn't we? So our LPO channel is not much better than our HTC channel. So yeah, we're not really finding a support level here at the moment, mainly because we had this very long extended bullish move. So in terms of a potential reversal, fall back over here, obviously a lot of people would be looking at the preceding support level just for that last wave that we had. If we get a break below that, that would certainly be a sign of increasing bearish strength, but it's not a breakout technically. And remember, we are applying a, a methodology here that allows us to be completely consistent in our approach to the market. So we could surmise that maybe that will ultimately be the support level, that the market might go sideways over here for a while, but that's just guessing. We don't have any information yet from the market to tell us that that may well be the case. So let's just give it some time. You know, the 4-wave HTC channel, especially because it's 13 candles, should catch up to this reasonably quickly. But if this does roll over and come back down, the only way that you could really potentially look to trade that in a bearish direction in the near future is using the WM patterns, or specifically an M pattern, with looking for outside C closes. So we need to have that break below here with an outside C close, meaning no bullish wave would be allowed to close above the low of these two waves here. That would give us valid M pattern, a valid M pattern for a bearish trade. So that's only if you're applying the WM patterns, and hopefully that answers that question. Right, so we've looked at dollar CAD briefly over there. So it has pulled back inside of the channel on daily, showing weakness. You know, we can't do anything with that on this time frame. However, has to be said, you know, because the wave is intact and the trend is intact, technically, if we get a bearish impulse candle here, that's a setup for daily. Okay. The one thing I am also going to be doing, folks, over the course of the next several weeks for the challenge, is I'm going to be talking less about strategies specifically, because I know that quite a few of the participants in the challenge are bringing other strategies to the party. So I don't mind answering specific questions, but I'm not going to be belaboring the discussion around strategies as such. So the more important thing for me in these discussions is, as a market review, is looking at what our technical analysis is telling us, all probabilistically, of course. Okay, so Aussie weekly time frame, again, you know, that's pretty dead, as you can see. Has been for quite some time, deep inside of the channel on both. So we had a winning overlay there last week. That's the only thing, basically. But even that party is now over. So Pumlani is asking about USD CAD on H4 for H4 impulse. Well, remember, you can only trade H4 impulse if you have reason to believe that you are in a trend and an impulse wave of that trend on the daily time frame. So that's the selection criteria. Now, okay, we're in a trend, but are we in an impulse wave or a corrective wave? Well, at the moment, it's a corrective wave. So if it does roll over and we have reason to believe we're back into an impulse wave, then certainly. Now, you might ask, well, here, if this candle today were to close like this, it's a bearish inside bar. Well, yes, but we're inside the channel if you're a channel trader. If you're trading an M pattern, fair enough, that would be a valid M pattern because you would have an outside C close. So in that case, yes. But remember, you can't chop and change between these things. So if you are selectively looking for technical analysis methodologies that is going to allow you to trade your strategy, and you sort of move between one and the other just so that you can get the trades in, well, that's wrong. You know, you need to be consistent, which means that you need to have chosen and written down in your trading plan what methodology you're using. So are you a channel trader? Are you a WM trader? Or I'm not saying you can't do both, okay? But then you need to make sure that you've tested that and that you're happy that that's the way to go. So, but yes, if you are trading an M pattern here, then we might well be seeing a potential setup to start going short on this. Remember, however, the fact that this resistance level was not respected and is now back to being a support level is a sign of quite significant weakness at the moment. Might roll over and break below it again. All right, so hopefully that answers that question. Kiwi, yeah, similar to Aussie, as you can see, we are in a bearish overlay on this as well, but it's in fact we entered that this morning. So yeah, not much happening at the moment on that time frame, and that is being mirrored here on daily, where we actually had a losing overlay. So it's really just a very messy market at the moment on these instruments. Okay, so more interesting is are some of the yen pairs. Likewise, however, here you can see that technically, although we've got that, we've still got an isolated higher, bigger pattern that hasn't yet been isolated. So technically, this wave is still intact. Remember, if you drop down to the lower time frame, and you can see that cyclicity has broken down on this time frame, which it very much has. That means that this trend is over. If the trend is over, then the wave on the higher time frame is also over. Okay, so even though that made a higher high, it failed to make a higher close. So that's phase two, end of the party. Now, I don't know if you guys hit your take profits here on your daily impulse trade. I saw some of the funded accounts did, some didn't. So just be careful about your setting of the target. So if you use a limit order for the daily impulse and you had your ATR target correct, you actually did hit the take profit. So but you did. If you got in at market and added the ATR onto that, then you may not have hit take profit. So interesting. So it's not always that close, that literally a couple of pips could make the difference. Also, by the way, if you're on a funded account, then you're more likely to have hit the take profit. But because of the spreads on most brokers, if you had a spread of a couple of pips on this, then it might have prevented you from hitting your take profit. So yeah, there were a couple, in fact, last week that just kind of got to the take profit level, and it just depends on whether it actually hit it for you or not. Okay, so currently in a bearish overlay on this. That will have had the stop already trailed to reduce the open risk on this, but yeah, let's see, maybe it'll go on to hit the take profit. So moving on, looking at weekly first, GBP Yen, similar picture, very similar picture. Also got that breakdown in cyclicity. So it's over. That bullish trend is over, which means that bullish wave is over, despite the higher high last week. Okay, so interesting. Was nice for a setup to short this on daily for an overlay, which hit the take profit on Friday. It was a nice full win. So if you had taken I don't think it was. I'm pretty sure we didn't. Let's just double check this. I'm not seeing. Oh, no, it was. It definitely was. So there's your bullish daily impulse. Just get this so I can actually read it. Our close on this is 98.2. The high on this is 75.1. So it looks like there was very much a bullish daily impulse here, and clearly that hasn't worked out. You would have been stopped out for a full loss on Friday. If you're trading an overlay, that would have actually won back that money. So that's where the overlay works. It's a nice example of basically coming out of the week last week with almost zero loss on this because of the application of the overlay, which we're going to be getting into more training on that in the near future. Okay, so Swiss yen, not going to waste time on this, folks, but yeah, you can see that it's just going sideways deep inside the channel. Had an overlay, also nothing doing at the moment on this. If you're trading WM patterns, remember that the gap over the weekend here is irrelevant. We still the lowest close here is still above that wave high. Remember, that's a market open, so it doesn't count. But yeah, if you're looking to trade, if you're trading a W pattern on this, it might be something there for you. But once again, you need to pick your methodology and stick with it. Very similar patterns here across the board on the yen pairs. The one thing I would say about this, though, of course, is that we haven't yet had a breakdown in sequentiality of cyclicity. So this is still a bullish trend, right? So that is not yet isolated. If it does get isolated during the course of this week, then obviously it would tell us that this bullish wave is over, at least for now, which would probably be matched with a phase two here during the course of this week. However, for now, we are still technically in a trend, so we are still looking for more trades on this. So having just a bit longer look here, you can see our H4 impulse, I beg your pardon, daily impulse hit take profit quite nicely on this last week. We haven't yet had any setups for overlays on this. We also traded this, I think, on the H4 impulse. Yes, there it is. And that one did not work out. We lost about 0.38, I think, percent if you were risking 1% on that trade. So call it 0.4% lost on an H4 impulse. So just another sign of those that, you know, that strongly trending markets coming to an end. Okay, so that's one that you can still look at quite actively through the course of the week. Right, Aussie Yen, again, same picture. It's like you may as well look at one currency wave, but this one definitely breakdown. So failed also to get outside of the channel again, didn't it? So we had that breakdown in cyclicity a while ago. And yeah, that if you were trading that daily impulse, we spoke about this for a while, and I think we survived that long enough to eventually actually hit our take profit on that. And there was another setup to go along on that, which we actually got stopped out of that on Friday, which is just as well because we had a gap over the weekend. But in any case, we've technically, again, on this time frame, we're still in that bullish wave, but not on the daily time frame. You know, the daily time frame, you can see that's all pretty much come to an end. I'm still generally happy to look for those trades across time frames, but certainly this is now very indicative that we've had a retest of this resistance level and it failed to get above it, and that failed test on Wednesday and Thursday last week is quite significant for us. So very much now accepting that this is a range. We had a failed breakout, or attempted breakout. It wasn't even a breakout. So we can't even call that a false breakout because we didn't even get a close outside of the channel. Right, so let's have a look here. So Pino's asking, do we assume that we're in a potential retracement wave as soon as the low high is isolated at the close of the next candle? Well, once the high or low, in this case, let's say a high, is isolated, then absolutely, it means that the preceding wave is over. If you are in a trend and that wave was an impulse wave, remember the definition of a trend is an intact sequence of impulse and corrective waves, or phase one and phase two waves. And an intact sequence implies 1, 2, 1, 2, 1, 2, 1, 2. So if one is over, yes, and we're in a trend, the natural probabilistic assumption that we're allowed to make is that we are now into a phase two or corrective wave. For those of you, again, who are new, impulse and corrective wave is Elliott wave speak, which you'll hear me talking about a lot, but quite a few people have adopted the terminology of phase one and phase two. An impulse wave is a phase one wave, and a corrective wave or retracement wave is a phase two wave. All right, so Alberto, we're still getting there. We're not yet at Eurogbp. All right, so that's the oh, sorry, still got this last yen pair, Gbp Yen, even more extreme than on the Aussie. So very much over and done with. This one, I don't think even this failed to even get as high as the preceding high. We haven't yet had this high isolated, but technically these are all inside of this long extended high test. So interesting that. So if this does now get isolated on this high, because we just had a series of higher lows the whole time, we've already got a lower low at the start of this week. So unless this goes up and makes a high that's higher than either of these two highs, then we will be that wave will be ended, and we will now be able to say that that is a fully isolated high, and we will be assuming that we're into that retracement wave. Pretty much what I've just described now in answer to Pino's question. All right, so that's on that time frame here on the daily. Clearly, we are outside of everything. There wasn't even an overlay for us here because it failed to actually touch the barrier of the either of the HTC channels. So nothing doing for us, nothing at all. Right, here's Eurogbp, Alberto. So we did get a slightly lower low last week with this slightly bullish doji candle on the weekly time frame. Technically, this is still a long bearish wave, isn't it? So on the weekly time frame, we've been in, as you can see, there's actually a live trade over here for this on this funded trader account for this member. You know who you are. And using advanced targeting, it's been moved to break even some time ago. So we're in a break even trade here. But we haven't hit where the trade entered over here. You can see we haven't had a close below the standard target, which means we haven't been able to actually start trailing the stop using the aggressive targeting approach that we use for advanced targeting. So we're still very much in that trade over there. So on the weekly time frame, technically this is still a bearish trend, but a bearish wave, but the bearish trend on daily has absolutely broken down, hasn't it? So you can see here, this technically is not an impulse wave if we're looking at that low, but maybe we're looking at that one, but I don't think so. However, here we've got a phase two, and here we've got another phase two. In fact, Friday isolated that low. We failed to get a close below the preceding low. That's phase two, phase two. Trend is over. Bearish trend is over for sure. And in fact, this is a setup for an overlay, which you should be in as of this morning. So yeah, that's what that looks like there. Let me just in fact do that while I'm at it. That's what it should look like there. I'm just going to change the colors. There we go. All right, so entered, stop, take profit. So this is definitely a bullish overlay as well. For those of you who are trading, if you don't understand the overlay principles, don't start jumping into things that you don't understand. So if you just start getting an understanding of the underlying principles of these strategies, that's a really good foundation for then moving on to adopting the rule set as such. All right, so I hope that answers that question. Alberto, you were asking about that. Yeah, but again, the same kind of picture that we've seen across the board. The one thing I would say about this picture, and I don't want you folks to read too much into this, please, is the fact that these trends have come to an end, but very few have shown any significant reversal, if any. So it's really it's almost like the market's pausing at the moment and consolidating. Doesn't seem to be any appetite for a reversal across the board. So as I say, that I'm not predicting or trying to create an expectation of resumption in these trends, but probabilistically over time, if you have a significant market movement and then it comes to an end and is followed by a consolidating period rather than a reversal, the more likely, and this, remember, this is not a basis for trading. Okay, we're taking trades. It's not even the basis for a strategy necessarily. certainly not a convex strategy. However, the likelihood is that as time goes by, if we don't get a reversal, that a resumption is on the cards. But as I say, please don't read too much into that. Okay, Euro Swiss, my usual least favorite pair. Yeah, we already spoke about this last week. We definitely saw an end to that impulse wave. Excuse me. And here you can see that very weak bearish cyclicity coming down here, which is a typical flag pattern, isn't it? So that's there's nothing doing for us here. We haven't even had any look at an overlay, actually, if you're following the full rules on that. But we don't really trade the Euro Swiss much at all. We were drawn into it recently simply because of that the strength of that previous breakup. My second least favorite pair, Euro CAD, is actually doing quite well. We saw take profit hit on this last week. One of our winning trades, Tuesday, I think it did, on the daily impulse, still very much on the daily time frame and a trend. And you can see here on the weekly time frame, this bearish wave is intact. This low test obviously is a bit of a warning sign, but remember that the shape of a candle is really just a summary of the lower time frame price action, and all we're seeing here quite clearly is just a phase 2 or retracement wave. So don't read too much into this. In fact, that is as an inside bar, even though it's not a bearish inside bar, is showing that the bulls here have got very little energy. We can't even think, even if they exist. So still a lot of strength. You know, this is the preceding support turn resistance level, not even coming close to testing that as yet. So yeah, this is, despite this traditionally being one of my least favorite pairs at the moment, is one of the better looking ones. And again, I'm not saying that that is a prediction of any kind whatsoever, because we don't do that at the GoPro Academy. I'm trying to teach you how to trade without any form of prediction. What we are seeing here is appropriate conditions stacking up very nicely for a daily impulse, first of all. Secondly, of course, along with that, H4 impulse. So if you are taking the very aggressive approach to assuming that all inside bars can be treated as favorable conditions, then this is something you could be looking at for an H4 impulse. Nothing yet this morning. We need to get that bearish impulse candle. If we get this one as a bearish impulse candle, and I think we're looking at 15 minutes time, aren't we? So yes, indeed, then this could well be set up to short this market on an H4 impulse. Bearing in mind that Mondays are not our favorite trading days, but you know, if it's right, it's right. Okay. Euro Aussie, you know, not nearly as pretty as that other one. Even though technically, again, we are in a bearish trend, this low test candle here, failing even to test below the preceding low, is a sign of weakness, as is the inside C close here, a sign of weakness. This is definitely not a strong trend, but we are outside of the channel on weekly. So having said that, we didn't get a single bearish impulse candle here last. Oh, we did actually. That was a bearish impulse candle. I beg your pardon. So what's that? Monday, Tuesday, Wednesday, Thursday. So that was Tuesday, Wednesday, Thursday, Friday. So Tuesday was in fact a setup for that. So yeah, you've got to remember to go with that. But yeah, it's not looking nearly as nice. You know, you can see from a mile away that this is a much weaker market, isn't it? So, in any case, if you are in this with a bearish daily impulse, then you will probably still be at full risk. This is not looking great at the moment, but we don't know what's going to happen next. So you just follow your rule set and manage that trade through to completion. Euro NZD, last of the Euro crosses. I mean, just looking on daily, that really, I'm sure you'll agree with me, is completely pathetic. So we are, however, still outside of the channel on the weekly here as well. But wow, it's really these are very poor or borderline, I should say, trading conditions across the board. And this one didn't, I don't think, during the course of 1, 2, 3, 4, 5. Okay, so this was also a bearish impulse candle for that. I think some of you folks might have been in one already and have just been trailing the stop and managing the trades through to completion. So yeah, it's just going sideways, on this time frame. But again, you follow the rule set. Don't uh, second guess the market. Don't make assumptions about what's going to happen next, because nobody knows, least of all you. All right, so moving on to the pound crosses. Again, here we are still in a bullish trend on weekly, but we did now from last week get that high isolated. That bullish wave is technically very much over on Gbp Swiss. Dropping down to daily, you could see we saw the breakdown in sequentiality of cyclicity previously. We traded an overlay here, which went on to almost a full take profit. There's still, if you're trading advanced targeting, it just has been testing that level. I mean, if you standard targeting, you hit your take profit. You can see that there's a trade going here with this funded account where it's just sitting at break even. Excuse me. So again, we don't know what's going to happen here. If it rolls over, it'll get stopped out for a zero win, but also zero loss. And for those of you trading advanced targeting, yes, it's frustrating when that happens. But that's what happens with advanced targeting. You're pushing that convexity or the convex optionality curve, you're making it steeper. So you're going to get a higher proportion of trades that don't work out, but the ones that do work out are going to be much bigger. So it's just a steeper optionality curve. It's much more convex, put it that way. Right, so you can see those on daily. That's just languishing as well. Gbp CAD, that is still outside of our 4-wave channel, inside the 3-wave channel last week. It's still valid, especially if you're, well, either if you're trading either as a channel trader or as a WM heuristic trader, then either way, this is great for H4 impulse. But obviously on weekly, we are deeply back inside of the channel. Not only that, but last week's close was a lower close. So we've had impulse. This is, yeah, it's definitely not, that was a false breakout. Put it that way. We can now treat that as a false breakout. Give me one sec, folks. Right. Remember, any questions, please do pop them into the chat box. Happy to answer those. Right. So if you're trading this this pair as well, and you're treating those inside bars as appropriate conditions, that means we did actually get a setup for H4 impulse this morning. And in fact, the candle closing at 4 a.m. Was valid, except for the fact that it wasn't post a pullback. So you can see quite clearly that comes after quite a lot of bearish movement already. So if you're waiting for that pullback before you go for the trade, that's also fine. If you're doing that, then you need to be trading all of the H4 candles, so not just the those that take place in the early part of the day. If you are trading just those few hours in the early part of the day, that is definitely a trade you would have already taken. Using most probably the daily ATR would have been appropriate for your initial stop. Gbp Aussie on weekly, nothing doing. We actually got stopped out of an overlay here last week. So that's just absolutely nothing deep inside of that channel, and on the daily as well. So just an absolute mess. In fact, we had a losing trade on overlay here as well. So this pair didn't serve us well last week, but that's okay. We now don't have any trades at all, even on overlays. So there's nothing more to look at on Gbp Aussie for now until something significant happens. Gbp NZD, similarly, we're not worried about that. That's on daily. So on daily, we did actually have a small winner on an overlay. But you can see here on weekly as well, deep inside of the channel, there's absolutely nothing happening here at all. Right, so here we're looking at, let's just go to weekly first, CAD Swiss. So technically, again, we've not yet had an isolated high. So this is still technically on a single time frame analysis on weekly is a trend, certainly an impulse wave of that trend. However, looking at the lower time frame, here we have almost, but not quite, had a breakdown in sequentiality of cyclicity. So in fact, I think it did happen because that is a single candle wave. So yeah, maybe I didn't update that simply because we've got an inside bar here. But in any case, you could look at it like this, which means that we've got phase two. That's definitely quite a significant failure in that test of preceding resistance. Of course, if I do update this properly now, it would also mean that we are inside both of the channels. Yeah, so whereas beforehand we weren't, we were still outside of our full wave channel. And you can see how it's been bouncing along on the support level here and hitting the ceiling. So quite a tight range at the moment, which is what I was saying earlier. You know, we're seeing this consolidation taking place when we could have potentially seen a reversal. Overlay that we're in over here at the moment. In fact, we need to be tightening up the stop on this one, which I'm sure all of, I'm sure the guys who are trading the overlays have done that. So it would look like that for the stop, and likewise our take profit. Actually, I'll tell you what, let me not do that. It's a lot easier just to change the color. So that's just the general picture. Give it a nice little blue. Okay, so nothing happening though otherwise at the moment on that one. But, you know, keep an eye on it. Definitely keep an eye on it. So going back to Pino's question earlier, you know, this is definitely, there's potential here for a bullish breakout. Again, not predicting it, just saying. Okay, so Aussie Swiss, yeah, again, we do still have an established trend on this. In fact, we had that preceding week's inside bar, but last week made a higher high, even though it was a doji, but it's still technically a bullish wave. And as the trend is still intact at the moment, we are probabilistically treating this still as an impulse wave of that trend, specifically if you're doing single time frame analysis again. So that's all well and good, which means that even during the course of last week for daily impulse, you would have been looking to trade that, but we didn't get any impulse candles last week on this time frame. Also, if you're looking at multi-time frame analysis, that trend, that bullish trend, has been over for quite some time. It's, you know, if you look across these 1, 2, 3, 4 candles from the end of that week all the way across, you know, we've had several weeks now where it's been going very much sideways. Okay, so nothing doing there. Even, I mean, we had an overlay a while ago, but since then there's been nothing. Another tight little range here. Let's see what happens. We don't second guess the market. Oh. Right, Aussie CAD, just look at weekly first. You know, we had that now as being confirmed, basically, we spoke about this before, as a false breakout. So although that was a trend, I guess, established trend, breakdown in that trend because we had phase one, impulse with that outside close. So that's back inside of the channel, no trend on this time frame at all. So there's nothing doing here for our daily impulse. However, we were looking at this for H4, established trend. We were outside of the channel last week, nice breakout outside of that channel, and have been for quite a bit, but we spoke about that before. And then we had that retracement last week. So Friday, isolating that high, and that really, especially because today we are outside of the channel again, is something that you could start potentially looking at for H4 impulse, but not if you're a WM trader, because that is an inside C close. So that's showing weakness. You know, we had that bearish impulse wave, but the retracement wave didn't respect that as resistance, and that is a sign of weakness, despite the fact that the market gapped and opened outside of the channel again this morning. Aussie Kiwi weekly first, nothing, definitely nothing. And yeah, on daily, I mean, it tested that resistance level, but quite significantly, as you can see, it failed. Also, that was a setup for us on Friday, and you can see I put in the stop setup for us with a limit order. I'm just wondering if that limit order in fact triggered this morning. So let's just have a look. Yeah, get this out of the way. Close is 5.9, high 5.6. So no, which is a bit annoying. But in any case, the principle is what counts here. So if you were trading the overlay, you would have had that limit order in place, looking like that. And on our broker, it doesn't look like it actually would have triggered the trade. However, that is a valid overlay. In any case, the point being, though, regardless of strategy, is that it tested that resistance level and has definitely failed to break out of that. So definitely still stuck inside of that range. But nice to see that it did come back up to the boundary of the channel again. Kiwi Swiss on weekly. Here again, you can see inside bar, not an inside bar, but it's at least last week's candle allowed us to confirm that that high is isolated, which means that this is definitely a retracement wave, and it's a flat retracement. I mean, we've known that for a while. It's very clearly, again, another little tight range over here, even though our channel boundaries haven't caught up with that yet. So another one to keep an eye out for. And then finally, KiwiCAD, not much happening here for a while. We did have that breakout last week over here, though, in terms of these two previous lows, but it did not break out of our channel. So still very much inside of the channel. We spoke about that resistance level being respected. We had that weekly overlay that won. So nothing for us on daily trades, but looking at the daily time frame, we saw that breakout the week before, and once again last week going flat sideways. So low been isolated here. This could well be a single candle wave, but inside bar, and so far today inside bar. So it's just very, very flat, very tight consolidation. So we're just sitting on our hands at the moment, doing absolutely nothing with that as well. So those are all of our currency pairs. And I'm focusing again on these for the purposes of the challenge, and obviously for our funded traders, because the valuation accounts, those are the only instruments that you can trade. So if you want me to do an update analysis on any other instrument, then I'm happy to do that separately and to post it in the group. But for now, I think that really tells the story across the board, to be honest. It is important for me to reiterate that when the conditions for your strategies evaporate, that you sit back and do nothing. A lot of people, when they start out trading, in fact, I'd say almost everybody, when they start out trading, tends to overtrade. So that is a really great way to throw away all the money that you must have made in the last 3 weeks leading up to this last week. So please take your time, do your analysis properly. If your conditions are not met, then don't take the trade. We don't pretend that we can predict the market, but we do know that the market will give us information that is sufficient for making a probabilistic decision about whether the conditions are appropriate for our strategy or not. And that's really the basis of what we teach in the skill set section of the academy. The ability to consistently doing what is the right thing, especially when it feels like it's not working, is the product of the right kind of mindset. And those two areas really are what you probably need to focus on developing the most. The rule set itself is really quite simple, but you wouldn't be able to apply it anyway, certainly not consistently, if you didn't have the right kind of mindset and, of course, skill set as well. Alberta's saying that it's so hard to sit on my hands. Yes, I saw your comments as well in the group last week. You and Pumlani as well. You guys, I think, maybe overtraded last week. It was definitely a week to just slam on the brakes, no question about it. And I do understand, folks, that can be really, really difficult. But, you know, there's nothing wrong with doing that once or maybe twice at most, because you will learn from it. You will learn from it. And it's important that you learn that lesson. So, yeah, that's. I always find that we tend to learn best from experience, no matter what anyone tells us. All right, so I see there's no more questions. So thank you, folks. I think it's been a good session today, and even though it's a bit of a slow start to our trading challenge, we have got 6 weeks to go. Make the most of it. Please do make sure you jump into the training with me on Wednesday and Thursday. Wednesday, by the way, we're going to be looking at some basic MT4 skills again. And Thursday, we're going to be continuing with our series on advanced price action technical analysis. So enjoy the rest of, well, if it's a public holiday for you or bank holiday in the UK, then enjoy the rest of the day today. I certainly am going to be doing so, adding to my tan while I can. And I will see you guys on Wednesday. Take care. Bye for now.